So one of the biggest questions that buyers have is how much money do I actually need to buy a house? And a lot of people think the down payment and the deposit are the same thing, but they're not. I'm Michelle Bell, and in this video, I'm going to explain the difference between a deposit and a down payment and how both work when buying a home in Ontario. So this is one of the most important questions in the buying process to understand before making an offer, especially for first-time buyers or buyers who haven't purchased in years, or anyone just trying to understand the financial side of the process and how it actually works. So once buyers understand how the deposit and down payment work together, the process starts to feel much more organized. And what's the down payment? So the down payment is the amount of money that the buyer contributes towards the purchase of the home. The mortgage covers the remaining balance. In Canada, the minimum down payment requirements depend on the purchase price of the property. So for many homes, the minimum starts at 5% on the first portion of the purchase price, with an additional percentage required above certain thresholds. So the larger the down payment, the lower the monthly mortgage amount, and often the lower the monthly payments. Some buyers choose to put more money down to lower their monthly payment costs, while others prefer to keep additional savings available for future expenses, furniture, or renovations. So what's the deposit? The deposit is different from the down payment. The deposit is submitted shortly after an offer is accepted, and it forms part of the total down payment on closing. So the deposit shows the seller that the buyer is serious about the deal and moving forward with the purchase. In Ontario, deposits are commonly submitted within 24 hours of accepted offer unless otherwise stated in the agreement. So the deposit is usually held in a trust account by the listing brokerage until closing day. Then it's paid out and goes towards your down payment. Deposits can be made in a few ways. So things like a bank draft, a wire transfer, or now commonly even by e-transfer. So the method depends on the brokerage, the transaction, and the amount of the deposit. The amount of the deposit can vary depending on the purchase price of the property, the market conditions, and the overall offer strategy. So in a stronger market, larger deposits can help strengthen an offer because they show stronger financial commitment from the buyer. The deposit is not an extra fee, it becomes part of the buyer's total down payment on closing. Understanding monthly affordability is one of the most important conversations that we have before purchasing. Understanding what monthly payment feels comfortable for the buyer's lifestyle. So just because a lender approves of a certain amount doesn't always mean that buyers should spend that amount comfortably. They need to know what they would like to pay per month. So we look at things like mortgage payments, property taxes, utilities, future maintenance, and overall monthly comfort level. The goal is making sure that buyers understand not only what they qualify for, but realistically what fits their lifestyle now and long term. Understanding the difference between the deposit and the down payment helps buyers feel much more comfortable and prepared before moving forward with an offer. So at this stage, the goal is understanding how much money flows through the transaction, what funds are needed and when, and what monthly affordability looks like long-term and short-term. Once buyers understand these pieces, the process becomes much more easier to navigate. So in the next video, we're going to walk through mortgage pre-approval, how buyers determine their budget, and understanding your monthly affordability, how that matters before you start seriously shopping for homes. So please follow along for the next step. I'm Michelle Bell.